Fitch Ratings' stable sector outlook on Australian transportation infrastructure reflects a slowing economic growth outlook in 2023, with high inflation and rising interest rates somewhat offsetting strong sector fundamentals. We expect any persistence in the high inflationary environment to pose limited risk for most transportation infrastructure companies. Many issuers have the ability to pass price increases onto their customers through inflation-linked pricing regimes under concession agreements or revenue contracts. Generally, we see limited refinancing risk in 2023. The tightening of monetary policy settings in response to inflationary pressures has caused capital markets to reprice risks rapidly. However, Fitch-rated borrowers are relatively well positioned from a funding perspective, as many issuers have accessed the markets in recent years to take advantage of cheap and long-dated liquidity. Fitch has a stable sector outlook for toll roads and ports and an improving sector outlook for airports. Fitch forecasts an improving operating environment for airports as international travel returns, building on the strong domestic recovery. The return of tourism should support the ongoing recovery in international travel during 2023, although we do not expect it to reach pre-pandemic levels until 2024. Domestic passenger traffic at most Australian airports recovered over 90% of 2019 levels by September 2022, and domestic passengers typically account for around 75% of total traffic across major airports in the country. We expect the ongoing recovery in the long-haul and transit segments to drive some growth in commercial income this year. However, squeezed discretionary spending across the international segment could depress this recovery. Toll road traffic has performed well in 2022, recovering to 2019 levels in most cases, although performance varies somewhat by market and asset characteristics. Low demand elasticity to the high cost of fuel, robust consumer spending, and the limited exposure of large networks to remote working have played a major role in supporting the traffic recovery so far. Inflation-linked toll escalations, together with conservative debt hedging profiles, are likely to provide a net benefit in the near term. For seaports, we anticipate some rebalancing of consumer spending away from goods and back towards services in 2023, which is likely to temper demand somewhat. The port sector outlook is affected by a deteriorating global economic backdrop and rising inflation. However, this is offset by robust sector fundamentals. We expect broadly stable trade volumes and higher inflation to pressure margins, as ports may not be able to pass on the full increase automatically to their customers via tariff increases.